In the office or on the go, this digital disruptor is ushering in a new way to work. Box is where content meets collaboration. But does it check all the boxes for your portfolio?
What do you do if you want to buy a cloud stock, but you don't want to chase something that's already red hot? Well, you look for the cloud plays that have gotten hammered, and you kick the tires. Something that's easy to do while we're out here for Dreamforce. Consider the case of Box, the cloud-based enterprise storage and mobile collaboration platform. After taking off earlier this year, Box's stock sold off hard over the summer. Why? A month ago, the company reported a solid quarter, but there was some softness in certain regions, and the guidance was seen as disappointing. Plus, management backed away from their previous forecast of $1 billion in revenue by the end of 2021. The stock lost 10% of its value in one day, and it's now come down more than 20% from its June highs. So could this pullback be a buying opportunity, or is it a sign that we need to get more cautious? Last night, we got a chance to catch up with Aaron Levie. He's the co-founder and CEO of Box. Take a look. Mr. Levie, welcome back to Mad Money.
Good to see you. Thanks so much.
Okay, Aaron, you've always been a straight shooter with us.
Yeah.
And you heard that narrative I just traced out.
Yeah.
That's kind of the Wall Street gibberish line. I've looked at you when the stock was at 12 is when we first started talking.
Yeah.
So a double's not so bad. But
Yeah.
are there nuances about that walk back and about that guidance cut that maybe people are missing?
Yeah, so the first thing to clarify is we've always said that we will be doing $1 billion in revenue in FY22. And previously we had pinpointed the quarter in which we would be doing the revenue run rate of $1 billion, and that was the thing that we did. We wanted to reverse some of the pinpointing, just because there's moving pieces on when we actually hit 250 million in revenue in a quarter. But we are still committed to $1 billion in revenue in FY22.
No change in what many people thought was a real forecast cut.
Yeah.
No. Okay.
Right. So what we're seeing right now in the business is a re-acceleration of a lot of the big deal performance, the solution selling that we're focused on, being able to sell multiple add-on products to customers. Just in this past quarter, we did about 25% increase in $100,000 and $500,000 deals year over year. So we're seeing some really strong performance as we move up market and go and serve larger and larger enterprises, which is obviously the sole focus of the company.
But your co-founder in a recent talk said there are headwinds, and then talked about the way that deals are pricing, but not necessarily that there's weakness in pricing, but how they're basically cut. Maybe headwinds, had you not used that, he not used that word, wouldn't have hurt the stock.
I think sometimes there's always a vocabulary that we have to be very careful of with Wall Street, but in general, we're seeing really strong performance in the business right now. We did announce at the very beginning of this year that this would be a year where we are evolving our go-to-market motion. We want to be able to go from selling a single product to customers to really the full platform and multiple products to customers as a broader solution. That has meant that we have retooled some of our go-to-market motions, some of our sales motions, and we wanted to make sure that investors understood that that would take some time to play out in the business to drive a re-accelerated growth rate. But we've seen a lot of the success that we were expecting.
Well, you always said to us, it's land. Yeah. And you landed, and then expand. And I don't think you've ever said it expands in a straight line, which is why I guess I'm more partial to the idea of buying a company with a very long-term vision. I don't think anything long-term about the need to store and access to storage and security has changed one bit.
Not at all. In fact, it's only increasing. So today we guided that we'll do a little over $600 million in revenue this year. We're going after a $40 to $50 billion market. So there's a tremendous amount of opportunity in front of us, and all of that 30, 40, $50 billion in spend is going into legacy solutions that have to eventually migrate and transition to the cloud. And we are building the leading platform to make sure we can capture that as it transitions to the cloud. So the upside is only increasing from here, but we have been making sure that we can improve our go-to-market motion to sell the full breadth of the platform and the full set of capabilities that our customers need.
Why have you chosen to be so outspoken on other issues involving some of the things that I talked about with Mark Benioff yesterday? I mean, you care for a tremendous amount about security. Security, in my mind, when I read through yours, is about the ethics of being secure for the customer, as well as not having hackers come in.
Yeah. I think in the digital age, security takes on a whole bunch of different fronts and ideas. One is the full security and protection of data. The other is your control and the privacy of that information?
Right.
Do you actually know what information you have on the internet? Do you have full control of how it gets used? And our promise and commitment to our customers is that we want to make sure you have 100% control of your data. It is your data. Right. You get to decide how it gets used, how it gets shared, and when you share it.
Right.
We have a service that lets customers even own and control their own encryption keys for the data that is leveraged in our platform. Mm-hmm. So our job is to make sure that when we're working with incredibly large enterprises or governments, companies like General Electric or Coca-Cola or Procter & Gamble or Pfizer, that we give them all the protection they need to be able to securely manage and store their data, while also ensuring that it stays private and that it complies with all of the different requirements that they have from a regulatory standpoint.
But we're also speaking about the notion of trust.
Yeah.
Now, Facebook, I think it's okay. I've been out here. Everyone tells me off the record they violated our trust, and then periodically when you reach it, they finally say on the record violated trust.
Right.
And violation of trust is what brings in the government. Government regulation, we're all in favor of reasonable regulation.
Yeah.
But has Facebook made it bad for everybody?
I think that I think we're in an incredibly precarious time because you have a lot of regulations and laws that were built for the 20th century. Mm-hmm. And now in the 21st century, with the amount of digital transformation that's happening in every industry, whether it's how we consume healthcare, whether it's how we vote, whether it's our transportation, we need a new set of laws that anticipate how much more dynamic this environment is that we live in today. And there aren't a lot of regulations that apply to how should we get our news, how should we be leveraging the information that we put into consumer social media platforms. And so I actually think it's incredibly important that we have these conversations. I think that there's some regulation that will be really helpful for Facebook, for Twitter, and for the rest of the tech industry. So we're not shying away from regulation. Most of our customers that we work with are actually regulated, so they actually are looking to us to say, can Box, can Salesforce, can other cloud companies take a leadership position to ensure that the sanctity of their data and that the platforms that they're leveraging remain safe and secure? And that's something that we want to lean into and actually help our customers with.
Well, look, I think it'd be great for customers. You've got a lot of terrific partnerships. I think that there's a speed bump here that because your stock actually went up to 28, maybe you shouldn't have done that, but I think it'll revisit it not that long.
That's probably your fault, not ours.
All right, I'll take that burden. That's Aaron Levie, he's the co-founder, chairman, and CEO of Box, a stock that we have been, a company and a stock that we've been behind since it came public. Mad Money's back here for the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.